What am I looking at for BBIG going into the future? Well, BBIG at its current market price has roughly 0.6% of its float in the money. But if we rise the price of BBIG to $1, all of a sudden 4.4% of the stock is in the money. Hello everybody, my name is True Demon and I am the Devil's Stockbroker. In this update, I'm going to be covering BBIG to look at the price action and see what the potential forecast is for BBIG, as well as recap all of its short interest and other metrics to indicate whether or not we may be experiencing a short squeeze in the near or long term for BBIG, Vinco Ventures Incorporated. As you can see on my chart, not much has changed since my last video, since we are currently looking at BBIG on a Wyckoff accumulation chart, which I have pointed out several times. This is the chart pattern that develops in a cyclical market of buying and selling over the long term. BBIG, for the last year or so, we've actually been in a very strong distribution selling pattern, seeing that BBIG has been pushing its price further and further to the downside. But despite this, we've seen overall a general climbing trend of its volume direction candles. Volume direction candles, if you're not familiar, is very similar to on-balance volume, where volume on positive days, where the price closes above its open, is added to the chart and causes it to rise, and for days where the price closes below its opening price, subtracts that volume from the day. In this case, what we're looking for is momentum to the upside or the downside. And when we see price action pushing to the downside, while simultaneously we see the volume direction candles moving over to the upside, this indicates bullish divergence. And this is something that indicates to me that we are in an accumulation pattern. The very beginning of an accumulation pattern starts with the stock slowly descending into various levels of support. And for BBIG, we've seen several of these. An initial support here, an initial resistance here, secondary support here, and then a third support here. Now, secondary support is kind of a mixed term, but you can see that BBIG has been pushed down to new supporting levels multiple times. With this last push to the downside, BBIG actually bounced early and above its previous level of support. This coincides with a very specific component of the Wyckoff chart called the spring. And the spring is essentially that final area of support that when the price action touches, it does not reach and instead rejects off of this price level, closing slightly above where that support level exists and rejects quickly, moving back to the upside. This is what we refer to as the spring right here. And this matches up with what most people on traditional trading charts would look like as a double bottom pattern. This is a double bottom. Specifically, however, the spring shows up at the very bottom of a market after a long period of selling and distribution. So the accumulation wave comes thereafter in the second half of the market cycle, where you see big pushes to the upside over the long term. And now, as it happens, Vinco Ventures has several catalysts that coincide with this spring that indicates that we are switching over to a bullish market, and we are just at the bottom. As you can see, I've got a few positions here marked on BBIG where I had entered into the low point at exactly 70.5 cents. I chose this level because I saw the market had begun to move sideways at the bottom of this chart, and I saw that this was a very strong level of support, so I decided to make a big purchase right here at the bottom. And as soon as that happened, immediately BBIG started moving up. I think I may have timed the bottom down to I think I missed the bottom by 1 penny. So now in the near term, what we have with BBIG is we're actually beginning to print what looks like a bull flag. So BBIG has now established a new level of support at a previous resistance. So starting here, we have broken resistance and settled up above it. Now what we would like to see the market do is to consolidate in this area and continue to move to the side. In a bullish scenario, we would like to see it bounce up immediately and keep going to the top of this descending wedge that BBIG has been trading in for the better part of about a year. So this is a big descending wedge that it's been trading in, where I have the upper bounds of its resistance up at around $1.20. Where it's currently at now is outside of a more conservative descending wedge that it broke earlier, and this would technically be the retest of that descending wedge. Because once a stock breaks out of the descending wedge, it tends to want to return to the boundary of it, retest it before going further and moving to the upside over the long term, and then begin a long-term bullish reversal. So back on the daily chart, there's been only a couple of instances where we've seen the actual Wyckoff accumulation occurring, and now we've seen it happen at the same price level twice. So down here at the bottom of my chart is a Wyckoff accumulation heat map chart. Specifically, what this indicator is meant to do is to identify areas where positive price action is spurred on by large surges of volume. And we can confirm this by seeing a general spike in the volume direction candles. So if you look at the stock price for BBIG on the daily chart, we see that the biggest accumulation that occurred happened just before the squeeze and then was confirmed by the real squeeze that occurred. So right here was the big phase of accumulation. We saw a general uptrend in volume. The volume direction candles started to cross above its fast-moving average, and then all of a sudden we got this big accumulation wave, tons and tons of shares being purchased at the same time, combined with a gamma squeeze where I think it was more than 50% of BBIG's stock was in the money on the options chain, and suddenly it pushed to the upside massively, and then we hit the top of the market at pre-tide split with the spinoff. Before that split happened, BBIG's top of its market was around $12.50. Don't quote me exactly. That's based on my memory, not by what the chart says in front of me. Post-Tide dividend, that comes out to around $8.50 if you include the value of Tide that spun off to its own company. We've had other waves of accumulation that happened here that resulted in some, modestly good price action. There was good volatility here. We actually had it here as well. That matches up with this accumulation that occurred, and you see this big spike in the volume direction candles. Each of these spikes confirms the move. What we're looking for is for there to be a crossover, and this is a very subtle change in the chart, but you see that we trade below this fast moving average, and then all of a sudden we get one big pop, one big candle that pushes to the upside, and then we get the big move. And that sees BBIG in this case moving from the point that the signal was made, it moved up 90%. You can't ask for much more than that. That's a really powerful, strong move from any stock if a stock moves up by 90%. So you can see that there's been a couple more cases where this also happened here. So on the price chart, we've got this one, we've got this one, and we got this one. And also confirmed by the Wyckoff heat map. So you can see that generally speaking, the red areas are very, very little volume. There's very small amounts of bearish volume that's pushing the price down over a long period of time, and then you get these bursts of volume where the price gets pushed massively to the upside, and then you see the price either quickly retrace to the 50% level and then slowly decline from there. What we have seen since then was every single time BBIG would break a low, it would close below that low after a second test, and then it would break it after the third test. And this was a consistent trend up until we had this first test with a new low on the 3rd of August. BBIG went into a suspension from NASDAQ because of the court case with Colucci and his great big circus of idiots. And then all of a sudden, when it came out of suspension, BBIG surged up to over $1.60, which was nice, but it was very short-lived, just based on volatility and the news that BBIG was coming out of its suspension, and nothing else really. Now we've had another test of this low, but we never broke it. So this for me is the buy signal. This is my confirmation. We have had since then multiple bullish divergences on the RSI, but for the first time, we now have a higher low on the RSI and the price chart after experiencing bullish divergence. And we are now about to get a bullish crossover on the PPO indicator. That's this MACD that you see right here. Outside of its price cloud, for me, this fits perfectly within my strategy to see BBIG make a surge in price over the next 30 days to 90 days. But we may not even need to wait that long necessarily, because now the market has begun to rally after a really, really bullish CPI report that's got everybody wigging out and buying literally everything. Unfortunately, I don't believe that this is going to be the end of the bear market overall, but we do get these big face-ripping rallies in the market that tend to just see everything getting bought up at the same time. BBIG is no exception. We saw the same sort of behavior of BBIG on the 16th of August, which happened to be the day that the market topped, and BBIG surged even though the market started to decline from that point forward. Seems like there was a lot of pent-up buying pressure waiting for BBIG to come out of its halt. Moving on to BBIG's short interest, I want to take a look at the Ortex data and see where we're currently at. So up here at the top of the chart with the orange line that looks like a flat line almost, this is the utilization. This is the percent rather of lendable shares that have already been lent out and sold short on BBIG. You can see that we've been basically dancing around 100% since, ever. BBIG has actually been at max utilization. I would say completely maxed out utilization since August the 2nd of 2021, which is even before it had its massive short squeeze that occurred here, and we saw price action like nothing else. You can also see that BBIG has been on the threshold securities list more than 8 times, 9 times actually, from what I see on this chart. Every single time that BBIG ended up on this list, it was because more than 0.5% of its total outstanding shares were failing to deliver for 5 consecutive trading days. So this is a major signal of a stock that is being targeted by institutions and nobody is delivering their shares to where they're supposed to be going. Due to all the settlement failures, BBIG kept getting hammered by all these shorts, and you can be sure that an institution or many institutions were colluding with each other in order to put this negative pressure on them. It is not a coincidence that the primary market maker for BBIG also happens to be invested in BBIG's largest competitor, which is Susquehanna, the market maker, who's invested in ByteDance that owns TikTok. You guys have heard this story before. If you want to hear more, you can learn about the conflict of interest with Susquehanna in the video linked above. You'll also notice that the number of shares that are on loan in BBIG, despite its short interest largely being, pretty much, it's steadily on the rise, but over the last several months, it's been fairly stagnant, while the shares on loan have been rising faster and faster and faster. Now we're up to 51.8 million shares on loan today. That's more than 26% of its total float, and there's currently 18% of the stock sold short right now. Considering that BBIG is now nearly at the very bottom of its chart, is considering merging with Zash Global Media, and is preparing to make a big transition for the company, they've just finally integrated AdRiser into Lomotive, which is their best application for short-form video content, which is proving to get more and more popular with each passing week as it rises in the ranks in the Google Play Store and the Apple App Store. It seems like a really bizarre time to be hammering and borrowing stock to sell short against a company like this, which is on the cusp of its greatest revolution right now. It doesn't really make sense to me. Unless, of course, you are a market maker who just so happens to be in a position where you're able to stuff the stock, hold its head underneath the surface of the water until it drowns in order to save its competitor, who is one of your largest investments. So aside from that conflict of interest, what does BBIG have going for it right now? Well, as it happens, the days to cover on BBIG have been rising steadily for quite some time. Starting in April of this year, they were operating at a days to cover of 1.09. Days to cover, if you're not aware, is the number of days it would take for all shorts to cover their positions if they tried to buy back the stock all at the same time. This is based on the number of shares sold short outstanding divided by the 30-day average volume. If you base days to cover on a 2-week average, you can see that we actually spiked in October all the way up to 10.5 days to cover and have recently come back down to just 7, but this is still an extremely high number. Generally speaking, anything above a value of 1 is considered extremely high and dangerous for shorts, because if any institution gets stuck in a position where they must cover their position quickly, then they themselves, by purchasing shares in the open market to cover, can cause the price to squeeze, and they can squeeze themselves. Let's also talk about something random and seemingly unrelated that's happening at the same time in the market with FTT token. This is the token based on FTX Exchange. FTX, if you haven't been reading the news, is owned by Sam Bankman-Fried, who is basically been proven to have gone from a net worth of $16 billion to zero. The guy lost all of his money because FTX loaned their money out to Alameda, which was making a whole bunch of levered bets that went tits up. Now they've lost absolutely everything, and they're getting wiped clean by the bankruptcy courts as we speak. Bankman-Fried is now going to face all kinds of litigation. He's definitely going to get sued into oblivion. He's probably going to go to jail because it turns out that he was disobeying every fiduciary responsibility that he had engaged with in his agreements with all of his clients. And now that everybody's lost everything, there is now a massive example of counterparty risk that is going to cause massive capitulation elsewhere in the market. If you can think back to the AMC squeeze that happened in June of 2021, you may remember that just a month before that happened, there was a big company called Archegos that was a huge hedge fund that went bankrupt because they lost everything in all of their massively levered bets and they were force liquidated. This caused a massive crash in Viacom stock. Right now, this stock is no longer on the main exchanges, so I'm going to take a look back at the Frankfurt exchange that shows their Class A common stock chart, and it's still available. This massive drop that you see in Viacom happened because Archegos went bankrupt. And nobody knew what happened until a few weeks later, in late March, that it was because Archegos had failed that this happened. And it wasn't the only stock that dropped on this day, but Viacom was definitely the worst because Archegos was the primary holder. Exactly 60 days later, you can see that AMC, which I've added to this chart, had an extraordinary short squeeze beginning on the 24th of May and proceeded through the 2nd and 3rd of June, where it hit the top of its chart, which pre-split AMC was trading at $72 per share, up from a low on the year, its 52-week low, of just $2.60. While this might seem unrelated, just bear with me for a minute. Sam Bankman-Fried's Alameda Research and 20-something CEO Caroline Ellison are responsible for the massive losses that were experienced by FTX Exchange. Alameda was a quantitative trading firm founded by Sam Bankman-Fried in 2017. The company was known for excessive and aggressive trading strategies, offered crypto trading in every market, and was led by CEO Caroline Ellison. FTX spun out of Alameda and was backed by some of the biggest names in the venture world, including Tiger Global, SoftBank, and Sequoia Capital. The exchange was valued at $32 billion in January. Keep an eye on Tiger Global. We'll get back to this. Things started to really spin out of control for everybody, starting with the Alameda insolvency that happened after the Terra Luna fiasco that happened earlier this year. Three Arrows Capital, the hedge fund, failed, along with the crypto bank Celsius at the same time. This has been creating ripples in the market for months, and FTX is just the next domino in line that is beginning to fall, and it's going to knock over other and bigger institutions continuously in the future. Now, remember Tiger Global that I said to hold on to? This is actually one of Bill Huang, who is the owner of Archegos Capital. This was one of his biggest investments, was in Tiger Global. All of these companies, Tiger Management, Tiger Global, Tiger Investments, they're all linked together by this guy. So now yet another fund that is linked to Tiger is basically going bust. This will make it the third one in the last year that has, or I should say the last 2 years, that have been linked to a massive collapse of a large fund or exchange. Bill Huang's Tiger Global has also worked with Susquehanna in the past. Susquehanna's growth equity was actually being spurred on by investments by Tiger Global into a company called High Radius. And this isn't necessarily to say that their investments are linked inextricably together, but rather that there is a link personally between the actors of these two companies. Another link to these is that Susquehanna International was actually setting up a Bahamas office, which is where FTX Exchange is located. And it's believed that they were doing this intentionally to be as close to the servers of FTX as possible. Now, all of a sudden, that plan is blowing up. Their reasons for doing so were also supplemented by the move to the Bahamas being the result of the Bahamas, quote, being a regulatory leader by establishing a crypto framework with the DARE Act in 2020. The industry is looking for clear rules of the road, and that is what the Bahamas has provided. The financial services company Susquehanna International is currently based in Pennsylvania in the United States, and it has been actively trading in the centralized and decentralized crypto markets since 2018. If they're working together, linking their ability to trade on the FTX exchange by being geographically extremely close to them. This gives them an advantage because they can actually make money on latency arbitrage. This is the difference in prices that occur in microseconds between different offers and orders being added onto the exchange. This allows them to scalp very small amounts of money off of the price with every single transaction that occurs in the market. And it's extremely lucrative for quantitative trading firms and also market makers in particular, such as Susquehanna. So where I'm going with this is that FTT token, or the FTX exchange token, has completely plummeted to worthlessness overnight. It's just gone, right? Susquehanna is one of the only institutions that is linked on Wall Street directly to FTX exchange. And they went so far as to open up an office that would put them right next door to their trading neighbor. Susquehanna is also one of the biggest quantitative firms in the crypto space, and not much is really known about them. They keep themselves in the dark as much as possible so that nobody else knows about them, and they've largely escaped scrutiny for the last decade, really. If Susquehanna ends up being one of those firms that was linked to FTX and had a whole bunch of assets linked to their FTT token, which is extremely likely considering that the FTT token was the FTX exchange token for exchanging different crypto and creating that arbitrage, or enabling that arbitrage to occur, it's extremely likely that Susquehanna may have been one of the largest holders of FTT token, which has gone from $25 US down to just $1.98 overnight. Even if they were the first to start to pull the ripcord and escape their positions, Susquehanna will still have taken massive losses. And the fact that this happened 2 settlement days before BBIG started to see some positive price movement along with the rest of the market seems like quite a powerful coincidence. What am I looking at for BBIG going into the future? Well, considering that shorts got into their positions and added to their positions very recently, trying to push the price back down once BBIG was getting at around 80 cents a share, suddenly the price started to push up even faster. Now there's 4 charts that I want to show you. First is the BBIG live options data sorted by volume. As you can see, calls dominate the top of this chart, indicated by the massive amount of volume in all of these. Notably, the strikes that are on weekly expirations between this week and the next 3 Fridays, January the 20th in 2023 at a $5 strike, and $1 strike calls for January 20th, 2023 also. Note exactly how cheap these options are and how much of them are being bought in such quick succession. Also take note of the massive amount of open interest on the calls versus the puts, which are notably very few and far between on this chart, but make up less than 1,000 options in total. This is the heat map of open interest in calls versus its float. Take note that at $1, there's a very significant portion of BBIG's float that would be in the money at $1 or higher. Compare that with the puts, and you see that despite the heat map being extremely red, there's not a single combination of these all together that make more than 0.5% of BBIG's float if these puts were to expire in the money. Nonetheless, these puts were relatively quite expensive, so if they expire worthless, then that's a big loss for whoever purchased them. Finally is the gamma squeeze chart, which shows that BBIG at its current market price has roughly 0.6% of its float in the money. But if we rise the price of BBIG to $1, all of a sudden 4.4% of the stock is in the money. That means 4.4% of BBIG's total outstanding market share is in the money in the hands of the bulls. If you rise the price up to just $2, then that goes all the way up to 10% of the float. 10% of the float at $2. And this is just for the calls between November and December 23rd. That doesn't include all of these January calls, which between $0.5 strike and the $2 strike adds up an additional 3.5% of the float. So if BBIG suddenly rips above $2, then this 10% figure goes all the way up to 13.5%. So that would be the number of shares that market makers, i.e. Susquehanna, would have to provide to all of the buyers of all those calls, which Susquehanna is likely the largest proportion of call sellers because they are the market maker, they make the market, they provide those options, and they love to brag about how much money they fleece off of retail doing it. Which is precisely the reason why I emphasize buying the in-the-money calls, because that makes it extremely difficult for the market maker to hedge against. If you buy the in-the-money calls, then they have to have the shares already, and that means if they don't have them, they need to go buy them. So after going through that entire spiel, I'm ready to give you my technical forecast for where I see BBIG going. First, I think that BBIG will hit its head right off of its 50-period moving average. We'll see a bullish crossover on the MACD, and for the volume direction candles to start showing a breakout through its fast moving average. So we'll see the volume begin to surge. When we see this volume picking up as the price is breaking up towards its 50-period EMA on the daily chart, that is where I expect to see some heavy resistance and some pullback in the chart to retest its previous level of support at 85 cents. If it maintains that level of support, then it will very likely break out above the 50 EMA, and then if the market continues to maintain its bullish trajectory, will break out towards its 200-period moving average with the potential to carry BBIG above $1 and maybe as high as $140, assuming that this gamma ramp doesn't get even larger between now and then. It's a lot to hope for, and there's a lot of factors to keep in mind, and frankly, there's no way for me to predict this with any degree of certainty, so please understand that none of this is financial advice and that there are plenty of reasons why I could be wrong about my entire thesis. So please make sure that you're doing your own due diligence and research and make the decision that's right for you according to your risk management strategy. That's going to be it for this video. Thank you guys so much for watching. If you like the content and you want to see more of this, be sure to hit the like button, subscribe to the channel so you can get updates on all of our latest videos, and consider joining us at hellstradingfloor.com, where you can sign up to join our Discord at discord.gg/hellstradingfloor. Thanks again for watching. I look forward to seeing you guys next time. Until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.